Hello, I'm David Chaston with 989, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of extended economic stresses coming out of China. But first, it's been a big start to the holiday shopping season worldwide, and in the US in particular. Sales at American bricks and mortar stores on Thanksgiving Day and Black Friday were down slightly from last year, but the performance was still seen as strong in a holiday shopping season where discounts spread well beyond the weekend and many shoppers have moved to the web. In Europe, all eyes are on the upcoming ECB review on Friday morning our time. Some policy fireworks are widely expected. In China, industrial profits sharply slumped by 4.6% in October, widening the 0.1% drop in September, and adding to the corporate debt default risk. The sluggish data reported by the Chinese National Bureau of Statistics on Friday was mainly driven by the energy and commodity-intensive industries, with problems of overcapacity, including oil, steel and coal. But high-tech manufacturing achieved a 14% year-on-year profit growth. Profits by equipment manufacturing firms increased by 9%. Chronic QE continues in China in the face of the extended slowdown. Their central bank injected another $24 billion into their financial markets on Friday. And just when it looked like relative calm was returning to the Chinese market, stocks nosedived on Friday. The main Shanghai share index lost 5.5%. Maybe some technical influences, but the result was awful. And this comes as concerns grow over the sudden rise of corporate bond issuance in the September quarter. It was up to almost 30% of all new credit issued in China in the period, almost exploding out of nowhere. The financial markets may or may not be polluted, but the air in their capital certainly is, embarrassing for China ahead of this week's UN climate talks in Paris. In Australia, banks and airlines are bracing for up to an $800 million to be slashed from the estimated $3 billion they get from merchant credit card fees and surcharges. Wall Street was on a Thanksgiving holiday, but there was some bond trading. The US Treasury 10-year yield benchmark slipped again slightly to 2.22%. US benchmark oil price is lower as well, now at just under $42 a barrel, while the Brent benchmark is under $45 a barrel. Huge new Iranian suppliers about to enter markets. And the gold price sunk sharply over the weekend, now at just $1,056 an ounce and a 6-year low. New Zealand dollar starts the week at 65.4 US cents, at 90.9 Aussie cents and 61.7 euro cents. The TWI is at 71.2. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.